Looks like we're live. I got one thing to say. Hope is not a strategy. So why am I saying such an obvious thing, a cliche that we've heard probably many times already? And if you haven't heard that, well, sit back and just think about it. Hope is not a strategy. Hope is a loser's way. Losers think. Now, don't get all religious on me and tell me that, well, we all have to have hope or faith. Faith, maybe. Hope, no. Hope is only what you do after you have realized that all is lost, given up. Don't try anymore. So the reason why I'm talking about it is some members had asked me, well, what's the exit strategy, Ernie, on today's trade? And now the position that we're in right now, as the trade stands right now, is that, we're up about 70 to 100%, depending on where you got your position in. And by all accounts, that is a fantastic return, but it's still, from our point of view, is well below our average, which is generally above 150%, sometimes as much as 1,500%. So the answer was, well, look, if you have
DMVP said I only had one contract today.
If you have just one contract or one position, a minimal size position, then your strategy is very different from somebody who has, say, 50 positions, right? Obviously, you have different size accounts as well, but the person with a lot of positions has many, many more options under their belt. But even if they have, say, 5 positions, again, way, way more options than the person with one. So if you're not going to go into this with hope, then you should have a strategy, a real strategy. If there's just one position, can you risk sitting there, or do you want to risk? Can you risk is another subjective thing. Do you want to risk sitting there and possibly losing that 70 or 80% return for the chance of making 150%? And that might be a very real strategy and a good choice or a bad choice, only because of the way our trades are asymmetric in nature, where we have very, very small risk to potentially very large reward. So it may be an okay choice, but it's probably a more prudent choice for the person with few positions to take what they've got and then move on and stick with that high and then wait for the next time. And maybe the next time will pin a trade and you make 1,000%. Now, the person with a lot of positions, they have many more options. They could do something like maybe take 2/3 of the positions, or even 4/5, well, 2/5, or say 3/5 if they had 5 positions of the positions off. Right now, that would leave the remainder positions such that they, even if they went to a full loss, you would still have a winning day, right? And let them ride. Let them take a free ride for glory. And there is a possibility that we might end up pinning the trade today with those two, and they could do marvelously well. So with more positions, you obviously have more options. And there's no hope involved here. No hope at all. It's all strategy. There's a little bit in this, well, I should say there's a bit of discretion here. And much of it comes down to your personal capacity for risk and your tolerance for risk. Your capacity is the objective amount of stuff that you can take risk with, right? The tolerance is your gut, what you can stomach. So those are two very different things, and you have to come to grips with, where you are on that scale and then make your decisions accordingly. Now, in our strategy, unlike other strategies, in the 0-DTE.com, the dash is important, because the other strategy without the dash would be probably have gotten out of their trade already, because they would have been running into risk or potential risk, and they would have made about the same on a single position as we had made here today. Let's say it's, $75, right, on a position. The difference is they would have put up 12 times more risk capital to make that same amount of money. And throughout their entire trade, because they were threatening a max loss, they would have been sweating bullets the entire time. Where we are just sitting back saying, oh, I wonder what I'm going to do tonight. I think I'll go sit by the pool, or, should we take profit now or wait till later and see if it comes in and we pin the trade and make another $1,000 on our $75 bet? Or, well, if we lose, no big deal. We'll come back and get them another time, with the realization that this is a very difficult time to trade because volatility has been dropping. So we have our first comment from the Peanut Gallery. Ken says, without the dash, hope is a guess. With the dash, hope is a confident expectation. That's exactly right. So remember that. That's zero-dte.com. The best zero DTE strategy. I would venture to say that it is the best trading strategy on the internet, on the interlubes, on the interwebs, on the YouTubes, anywhere else that you want to talk about. I don't care what service it is. I will challenge anybody on a head-to-head with our risk to reward, our average risk to reward on anybody else's strategy. Challenge. Challenge is down. I guarantee, well, there's no guarantees in life, but I'm confident that we would beat you handily. It wouldn't even be close. A completely different paradigm. So while we're sitting here averaging better than 150% return on our trades, there are other people that are trying to eke out these menial, small 4 or 5% returns, and they're sweating the entire way. While we're all kind of glum and dejected that we only can make 75 or 80% because it's just not up to our standards. Do you see the difference? Do you see the difference? Would you rather be kind of a little dejected and glum and make 80, 100, 200%? Or would you rather be nervous as hell, anxiety-ridden, biting your nails off, sweating bullets to make 4% or 5%? Obviously a rhetorical question. It's just no contest. No contest at all. All right, let's see. Where is this trade at now, by the way? I haven't looked. Let's take a look. Yeah, it's dropped down again. So now we're at about a 30% return. It is, it's getting a little long in the tooth. This might be one of those times, though, where we're building up a base, and then just as the close comes, we have one of those trades that it just shoots way up, and then you make gobs of money, or it could just shoot right down. Of course, if you only have a small amount of risk capital at risk, you can easily take that chance. If your plan is to make money consistently, then you probably just want to take the profit and then move on to the next trade. We've got 3 of these opportunities every week. Now, this week has been kind of slow. Monday was a good winner, a surprise winner. Wednesday was just a max loss, I guess, or a loss, but no big deal. Today makes up for yesterday's loss easily. That is if you already got out. And it could potentially be another pin trade. We don't know. But Monday's trade made up for the next, 2 weeks of straight losses, if that's what would have happened, or more. Of course, next week we're bound to make another pin trade or a good trade or 2 or 3 good trades. So that's not going to happen. But what I'm saying is our 30% or 10 to 30% of the time, we make trades that would easily cover us for straight losses for the next several weeks. Imagine having that kind of confidence behind you. Now, I'm not saying that's what's going to happen. I'm just saying that that's the hypothetical, that our trades and our returns are so strong versus the risk that we don't have to sweat the losses. As a matter of fact, the losses are nothing. comparatively. In fact, we don't even talk about the losses. I mean, that's how far it goes. Where most people are talking about managing the risk, our risk is managed inherently in the strategy. So there is nothing active that we have to do to manage our risk. Our biggest task is managing our profit, trying to figure out how we can maximize the profit. Are we going to make 50%, 80%, 150%, 300? There's freedom in a number of different ways. One is that we've used less risk capital. We can use smaller accounts to make the same kind of return or make healthy returns. We can use the freed up capital on other high probability trades. Maybe invest in something that has a little bit of surety in these uncertain times. Perhaps invest in, I don't know, a hard asset like gold or silver or investment housing, anything. And then just use this strategy here to slowly build up your capital, slowly build up your I guess this would be, it really depends. Now, there's a whole nother choice that you can make. You can say, okay, I'm going to use this trading to build up my free cash so that I can have cash to invest, or I can have cash to buy things, or cash to pay bills, something like that. And then use all your other free cash for those things like the investments. I mean, that might be a great strategy. I think that's probably the best way to go. Where people in the other strategies, where they are risk-laden, where they are constantly trying to get and eke out small amounts of profit, they are focusing everything, all their energy, on that small return. It's wasted energy. And they get frustrated, and they succumb to fears like fear of missing out and greed and other things, because maybe they get on a little winning streak and they figure, okay, now here's my opportunity. I'm on this winning streak. Let's keep it going. I'll up the ante. And then invariably they lose it all again. So they're spending all of this bad energy on something that provides no return. We spend quality energy, quality time to make a healthy return so that we can focus on the things that are really important in our lives. This strategy is not only a strong trader strategy, but it is a life-altering strategy. It allows you to live your life. And I don't want to be compared to those charlatans that are out there that will show you their McMansion behind them and their Lambos in the garage, because I don't have any of those, although I live a very nice lifestyle. But I never show it. The only thing I show is, this sort of industrial look back here. But, yeah. I could get all those things if I wanted them, but I don't need them. I don't need them to make me happy. And quite frankly, those people aren't showing you them because they only want to give you the illusion of being happy, because they are such losers in every way. So they lie to you. They lie. I will tell you the truth right to your face, and I won't hold anything back. But while it's tough, it is also caring. It is tough love. I do it because I care about my members, the members in our group. I care that they find a better way to behave, to act, to trade, a better mindset, a more relaxed mindset where they can spend quality time thinking about the things that are important. That's what we do here. Paul says, I agree. That's why I'm putting in all-nighters 3 times a week in Australia. Yeah, it's really a bummer that, being on the other side of the world, you have to kind of alternate or have an alternate lifestyle. But, I've done that too. I have customers virtually in every time zone around the world. And for me, because this service is so customer oriented, this service is all about treating everybody with respect, dignity, and tough love to make sure that they become winners. And I afford everybody the same kind of attention. In fact, I literally give my personal mobile number to every member, even the trial members, and they can call me and set up some time and talk over issues. Once you're a full member, you can schedule time with me. And that is because, I like to say, now, I say this all the time, and I have a friend who tells me that, I think that's bullshit, Ernie. You may say that, you may believe it. And what I'm referring to is that I don't look at this as an alert service. I look at this as an educational service where I provide coaching and mentoring, and then the alerts are a manifestation of that strategy and that mentoring. They are an example. They are a demonstration. And of course, you can trade those alerts because they are gold or have been gold. So that's cool. But that's basically the difference. I really do treat this service as a way to help people as opposed to trying to do what I guess other services are doing, where they try to create a facade of doing something that is not real. Everything here is real. Now, what is real too is this trade is really having a hard time getting some giddy up and go. Of course, most of the traders have already gotten out with their 75 to 80% to 100% return on this really very poor day from our standards. And then there are other people like me that are still in the trade. Well, I've gotten out of some of my positions, and I do have a free ride going, so that's my strategy. So I have a few positions that are on a free ride, and I'm waiting to see if they cash in. They're still profitable. But, hey, look, I would love to see if this thing could rise up. We needed to get up to about 44.05, or actually anything above 43.96, and we will be profitable, right? That is if we hold it to the end of expiration. And we generally don't do that. We generally get out way before that. But that's what I'm waiting for right now. So I've already made my profit. I'm profitable for the day. Now I have a free ride with a few contracts, a few positions, and we'll see how that goes. That's my strategy for managing profits. I take the profit. I got it. I've locked it in, and now I'm just waiting with my free ride, my free ticket to the show, and see what it does. Will it pay off? Will it not? Sometimes it does. Sometimes it doesn't. And when it does pay off, the payoff is spectacular. Like I said, imagine putting down $75 and then coming out of the day with a $1,000 winner. That's what happens. On a regular basis, by the way, it seems. But, that's where we're at. I don't know. Are there any questions here? Any more questions? Let's see. So, Paul, you got to make sure that you don't show your wife these comments that you're making here, going for hoes and Lambos. Geez, what kind of guy are you? Just kidding. Locked down now, so it's a good opportunity to do this. In Australia, you're all locked down. Yeah, that's what they're referring to. So in Australia, you can totally alter your lifestyle. I mean, what difference does it make? You're not going anywhere. So you might as well, be a night owl and trade the 0-DTE.com strategy. But I feel, we're getting there too here in the States. There are some states, and our illustrious president is talking about lockdowns and mandated masks and vaccinations. I mean, it is Big Brother times 10. It's unbelievable. In any event, I can't get into that. Got to get into a better place, a better mindset. Sit here with my buddies in the Zero-DTE trade room on Discord and hang out. Talk shop. Talk other stuff. Make money. All right. That's about it for today. It's Friday. I hope everybody has a great weekend. I certainly have great things planned for this weekend. But right after this, after I get off, I think I'm going to go shoot a little pool. And then I take a nice trail walk with the dogs and the wife. Always have to bring the wife along. And then, let's see, maybe go to the beach. Visit some friends while you still can. And then what? Oh, then Sunday comes around, and Sunday evening, this all starts over again. We start looking at our next trade. We could be taking a trade Sunday evening because we trade the futures. We don't trade the SPX. We trade options on the futures. And that's where it's at. Well, you know, David just asked, well, how about NQ, the futures on the NASDAQ? And it is definitely an option. They also do 3 expiries per week. But I guess for most people, it's not really that strong of an option because the margin requirements on it are much, much higher than the ES. So it's a little bit more expensive. But this strategy would work just as well there. And I think there's a lot more volatility there as well. So it might even be better. But for the sake of sanity, we don't do the NQ here. But perhaps we will do some of those trades from a demonstrative purpose and do that as well. Because, you know, with that bigger margin, the bigger trades and that higher volatility, there's a chance of making a lot more money, but there's also a chance of losing more too. And I think for most people, when you get the minimum size trade on the E-mini S&P, that's really a good comfort level for a lot of people with smaller accounts, you know, the $5,000 or $10,000 account. With the NQ, you know, you need your minimum size account is probably more like $25,000, $50,000. So it might be great for some people. And so we could always explore that, right? But that's really the problem. And it doesn't matter what the multiplier is. The fact is that the minimum position is still very expensive, much more expensive than the NASDAQ. I'm sorry, than the E-mini S&P. It's about maybe 3 to 4 times more expensive. And I'm not saying that that's a problem. I mean, it's not a problem for me. It's a problem doing it for people who have the smaller accounts. All right. So we'll definitely look at that, Ken. But for now, let's say that that's it. And I hope everybody has a great weekend. And peace, brother. I hope you have nothing but peace in your life, tranquility, family, friends, good times, a good dog. Right, Obi? My dog at my feet. One of my dogs. All right, take care. Where's that friggin' off button? Off button! There you are. See ya.